share it today. Let's understand the two methods for calculating depreciation. One is straight line method and another one is the second one is declining method. For calculating the depreciation, what are the elements you need? You need to know the cost of the machinery and the salvage value and the life in years. And at the same time, if there is no salvage value, you can calculate the depreciation using the rate of interest. So what is a formula for calculating the depreciation? So what you can do, you can take cost, you can take cost of an asset minus salvage value divided by useful life. This is the formula to calculate the depreciation. So it is the depreciation is 16,000. So in straight line method, you have to charge depreciation of 16,000 every year. So whenever before calculating depreciation, it's always better make a table like this so that you can write the computation, depreciation expense, accumulated depreciation, and book value. We'll start working on first. Let's start working on straight line method. So in straight line method, take a book value of 100,000. Okay. So you have bought the machinery on 1st of January 2015. How much is the depreciation? You have already calculated depreciation over here. 16,000 is the depreciation. So take a 16,000 depreciation, pass a journal entry, okay, for 16,000. So the journal entry will affect two accounts. One is depreciation account, another one is accumulated depreciation account. Okay. So in depreciation account, 16,000 will be expensed out, and in the asset in a balance sheet, it will show as 16,000 in an accumulated depreciation account. So accumulated depreciation account is a contra asset. It will get minus with the asset value. In the second year, again you have to depreciate 16,000. Third year, fourth year, fifth year. So the total accumulated depreciation will be 80,000. So that is 16,000 plus 16,000, 32,000. 32,000 plus 16,000, 48,000. 48,000 plus 16,000 is 64. 64 plus 16 is 80,000. So this is the simplest method of calculating the depreciation. Same value will be deducted every year. And at the end of the year, you will get a 20,000 salvage value, book value. Okay, net book value. So let's understand how to calculate the depreciation in declining method. In declining method, if you make this like this table, it is very easy to understand. Just have a look on the depreciation. Here it is 20,000, here it is reduced, here it is reduced, here it is again reduced, right? So how it is calculated? So here in declining method, the depreciation is calculated on the book value in the first year, it is 20,000. Okay. And in the second year, the depreciation is charged on 80,000. Third year, depreciation charged on 64,000. So you understood now how the declining method works and how the straight line method work. So these are the simple methods, two very famous method of calculating the depreciation. So let's understand now what is the difference between straight line method and declining method. This is straight line method and this is declining method. What is the difference? What you can make of the difference in this? The simplest method of depreciation is the straight line method, which simply deducts the cost of an asset evenly over the course of its recovery period. That is for 5 years. In this example, it is 5 years. However, the other method, which is declining method, here the result in larger expenses in early years of an asset's life. You will have a more expenses in the first year and the lesser in the second, third, and very lesser in the fourth year. So next question is, second question, to calculate the capitalized cost of an asset, you need to add together the initial purchase price of the asset and any additional costs that are incurred during the asset's life. See, I have made one table over here, so you will understand what is exactly the capitalization of an asset means. So, whenever you are purchasing an asset, there will be a purchase price. But how do you calculate the depreciation on an asset? The depreciation will be calculated as on the cost price, you have to add import duties. If you have spent any import duties on that during that period, you have to add it. You have to add freight and handling cost to get that machine to your warehouse. If there is any installation, if there is any transportation, if there is any professional fees you have given, you have to add it. And if you have if you have got any discount, gained anything, you have to less it. And the VAT you have paid on this purchase price, you have to less it because VAT is always refundable. So you have to less it. So you will get a cost of an asset for calculating the depreciation. So this process is called as capitalization of asset. Okay, which is explained over here. And there are two more questions. Is VAT part of Opex? Opex means operating expenses. Okay, VAT is an indirect tax. VAT is levied on the sale of the goods and services rather than on the income of the business itself. And do you include VAT when capitalizing an asset? I've already explained over here. VAT we don't include in the capitalization of asset. Okay. So the company is responsible for the total amount including VAT. However, VAT is recoverable cost. So hope you enjoyed this session of calculating depreciation in a very simple two methods, straight line method and declining method. In my another video, I'll explain the another two methods of calculating depreciation. Thank you very much. Let's grow together. See you.